welcome to the closing bell on the 18th of December, racing towards Christmas. And I thought today was a good time to just have a look at, how you'd review what you're doing. I wrote the article in Money Weekend on that topic, so I thought I'd just take you through my process, just to give you a sense of how to go about it. It's pretty simple calculations, but I think if you don't know how to do it, it can be a bit confusing, I guess. So I thought that might add a bit of value for you today. As far as the markets go, look, we've had this big ramp in the market. I'm actually recording this on Thursday because we've got the Christmas party Friday, which is going to be good fun. And we had the big ramp in the market after the Fed came out with their tapering announcement. And I was quite amazed, quite frankly, that the market rallied so much. But let's see how things pan out after the end of the option and futures expiry, which would have happened last night for you on the Friday night. And often at the end of the year, there is that ramp into the futures and options expiry, which happens on really every expiry. And the end of the year just seems to be the really big one. So I'm a bit skeptical that the rally can continue as it does, but the technicals are saying everything's looking fine. I backed off from my short-term bearish view last week with that weekly buy pivot. So look, letting the market do what it wants to do. We're all still long in my service. I've just taken a few profits to lower some exposure. But yeah, you can have big reversals around this Christmas period. So do keep your eye out for that in that early January time if we do see some selling pressure. So that's really my only comment on the markets. I've lost a bit of interest, quite frankly. I'm ready to relax for the next few weeks. So let's have a look at how I look at my trading and see if that can add some value to what you do when you review your trading. So this is just a list of really every trade that has happened in Pivot Trader since inception in 2019. So this is 3 years of trading data. And all I've got there initially, it's just the stock, the ticker, the date that when we open the trade, the gain on that trade. And then I just split out the gains into the losses and the wins. Pretty simple thing to do. So you can see there, we've got the losses and the wins for each trade all the way down. And then I simply, add up all of the losses in percentage terms, add up all of the gains in percentage terms, and then do a couple of calculations on that, including the number of trades you can see there. So there's been 66 trades over that 3-year period. And when we look at the numbers over here, you can see we've got 66 trades. There's been 27 losses and 39 wins. So when you look at that, all I do to make the calculation is, sorry, I'll go back to the bottom for you. And I'm looking at that number of losses, and we've had 27 losses. So I'm dividing that total figure of 437% that you can see there, dividing that by the 27 losses to find out the average loss per trade. And then I'm doing the same thing with the wins. We're looking at that total percentage gain across all trades. And then we're looking at the amount of winning trades that we've had and dividing that total number by that figure. So when we have a look up here, it's a pretty simple set of calculations. I end up with an average loss per trade of 16%, and our average gain per trade is 49%. So then I divide that figure, the 49% figure, divide that by the 16% figure, and then that ends up with that risk reward figure I was telling you about. So that comes to a figure of 3.06. So that's saying that you're making 3 times as much on a win than you're losing on a loser on average, which is that's sort of what traders really do shoot for, is that 3-to-1 figure. And I can tell you it's pretty hard to actually achieve that. Often it's around 2-to-1 or even less, and you can have a viable strategy doing that. But really you want to shoot for 3-to-1 because that gives you a lot of room for error in your trading. So then the strike rate, we're looking at, looking at that 39 winning trades and just dividing it by the total number of trades you've got there. So that comes out at 59%. So that just gives you a really good overall view of how your trading's been going. You can say, right, I've got 59% of my trades right. So I'm getting nearly 6 trades out of 10 correct, but I'm making nearly or over 3 times as much on my wins as I lose on my losers. Now, just so you can understand the power of how those figures work and what it means for a strategy over time, we'll do a little example just so you can understand what those figures really do mean. So, let's, for example, say that you had $100,000 to start off with, and you risk, which is a pretty usual thing to do, you risk 2% of your capital on any one trade. Sort of around that figure is what you should do. Sometimes it goes up and down depending on how well you're doing. But just for this example, let's say that you're risking 2% per trade. So that is $2,000. So if you're risking $2,000 per trade, based on this strategy, when you're winning, you're actually winning $6,000 per win. So if we play this out according to what happened over that 3 years and look at what results you would have got, well, you've had 27 losses, haven't you? So that means you've got that times 27. So you've had $54,000 worth of losses over that time, but you've had 39 wins and you've made 3 times as much on the wins than you've lost on your losers. So that would equate to $6,000 of wins per trade. And you multiply that by 30 times, by 39. So you've had $234,000 of wins. So in total, you would just subtract the losers from the winners. And you can see there, over that 3-year period, that's $180,000 that you've made with a starting capital of $100,000. And that's based on just looking at this strategy of how it works, of making 3 times as much on each win versus losers, and having a strike rate around 59%. But that number, those numbers move. They're constantly moving over time. So you really do have to keep a track on it over time to get a real sense of how you perform through different cycles, through different market dynamics, different troubled times. I mean, this 3 years actually includes the crash in 2020. So, that means you're seeing data over different market conditions. And it really can be a good idea to get that short-term idea of how those strike rate and risk rewards are going, and seeing how it actually moves over time as you trade well, trade badly, and get a sense of what your real long-term figures are. Because, really that was my goal, was to sort of be around that 60% with a 3-to-1 risk reward, because that just gives you so much leeway to make mistakes. And we all go through bad periods trading. We're going to go through another bad period again. I'm sure my strike rate will fall during those bad times, but it just means that you've got a lot of a buffer once you've been trading for long enough, and once you really do see how you are trading and what the results are. Because I think we do fool ourselves often. I think we don't really drill down into the actual figures and get a sense of what's going on. And there's just so many lessons you can learn about yourself and about your trading style, about when you make mistakes, when you go well, what sort of a confidence player you are. It really is important to drill down into those figures. And as you can see from the spreadsheet I gave you, it's a pretty simple set of calculations to set out. It doesn't take that long to figure it out. So that really is the main thing I wanted to discuss with you today. I don't really want to focus on the markets. I think they could go into a bit of a quiet period with low volume after we get the end of expiry on those futures and options in the States, which would have been last night. But yeah, you never know. The Christmas period can be a volatile time because there's not much liquidity around. So I'll be watching to see whether things do turn back down over the Christmas break. But really, I'd rather focus on other things and go and enjoy my Christmas party. So I hope you have a great Christmas too. And I will be back next year with more of these closing bell videos for you. And yeah, have a great break. All right. Well, and also make sure you check out my stuff. Clicking on the link below the video, you'll see my pivot trader, which is what I got those figures from, and also the Australian Small-Cap Investigator, which I've recently taken over. That's probably a cheaper way to get involved and start trading with me. And maybe over time you can graduate to that sort of more expensive pivot trader, which is where I give you all of the nuts and bolts of my trading system. All right, that's enough. And I will come back with more next year. All right, cheers.